Hello, welcome to the stock market channel. My name is Stephen, and today I'll be bringing you some essential chart lessons. And I'm going to show you how Apple went from $166 to $196 in a short time of 1.5 months. So, without further ado, let's start. Now, Apple, as I said, went from $166 to $196. That's about 30 bucks. And we're going to look at what are the technical reasons that this stock move 30 bucks in just a short period of time. And if you're able to get into the stock at 166 and sell at about 196, it's going to be a very good return. But before we know how it goes up so much, we need to look at the technical reasons. And that's why it's important for us to look at the charts. And why is it important to study the charts and look at past winners? Because patterns are actually repetitive in the stock market. And if you're able to study lots of them and ask yourself what is the reason why the stock moved up in such a rapid pace in such a short period of time, and if you study enough, you'll be able to spot patterns, and you know they repeat themselves. And in the future, if you spot a pattern like exactly the same one, you'll be able to take advantage of this knowledge and enter the stock itself. And what I'm going to teach you today, and what you're going to discover today, is that the confluence of technical concepts actually give you success in trading and analyzing the markets. So, what are the different technical concepts that I cover in this short video of how Apple moved from 166 to 196? It looks very simple in the chart, but actually, there's so many different type of technical concepts that you need to understand. And if you do not understand it in this video, that's okay. You can do some study on your own, Google it. Like, for example, we're gonna look at the 200-day moving average as support. Yeah, the 200-day moving average is actually a support itself. If you do not understand that it is a support, maybe just Google up and understand why it is so. Because this video is we're just going to touch and go on the different concept, how to spot reversal points and so on. But we're not going to go in depth into each and every technical concept. So besides the 200-day moving average, we're going to look at the breaking of downtrend line, uh, Bollinger Bands, the MACD, the stochastics, the Fibonacci, the weekly 50 MA, and then we're going to look at the triangle pattern as an entry point for a trade, 60-minute bullish crosses to identify trend changes. And we're going to look at some powerful patterns like consolidation support, Japanese candlestick patterns, bottoming tails, and also the channel breakout. Now, this is a daily chart of Apple. As you can see, around here, right, this is the daily chart of Apple. If you can see, there's a 200 MA support there. The yellow line here is actually the 200 MA support, and it's a rising 200-day moving average. If a stock has a rising 200-day moving average, it's actually a bullish sign because it's a bullish long-term trend as it goes up. And you can see the stock corrected here, went up, went up, and correct down to the 200 MA. The 200-day moving average is actually a support, and sometimes when the stock touches it, it immediately bounces up. But at sometimes it will slash through the 200-day moving average, and then it will bounce back up. Just like in this case here, the stock slashed through and then bounce back up. And here we can also see that the stock actually broke a downtrend line. When a stock breaks a downtrend line, it is a sign of a reversal of a trend. From here all the way down, it corrected to the 200 MA, but the moment it breaks a downtrend line, it's actually a change from a bearish trend to a bullish trend. But the main thing for us to take note here is that this stock actually start dropping when it hit the 200-day moving average. And there are many times when you see a lot of stocks, especially in S&P 500 and Nasdaq, that when they drop to a rising 200-day moving average, they kind of just stop dropping and they go back up. So it's a good idea for you if you want to find a trade to look for stocks that are dropping to their 200-day moving average. This is a same daily chart, but I've overlaid it with Bollinger Bands here, and the MACD, and also the stochastics that are oversold. Now, remember, when we are able to locate the point where it stops dropping, I said the 200-day moving average. But we want to be confident in our analysis, so we put in a few type of indicators. For example, you can put in the Bollinger Bands. When the stock drop to the edge of the lower band, it is a sign that there's a possibility of a reversal in the stock. If you know how to use the Bollinger Bands, when the stock reaches the upper band, there's a possibility of it correcting. When it drops to the lower band, there's a possibility that it's gonna reverse back up. And the MACD also supports the fact that the stock is ripe for a bullish reversal. You can see the MACD histogram shortening. When it shortens, it means that the bearish momentum is slowing down. And when it crosses back above the zero, this is where the MACD lines give a bullish buy signal, and it supports the thesis that the stock is going to rise soon. And we have the oversold stochastics. As you know, when the stock goes to more than 80, right, the stock is ripe for a bearish reversal. When it drops to the below the 20, the stochastic says it's oversold, and there is a possibility that it's gonna go back up. Now we're going to look at the weekly chart. This is where we enter the realm of more advanced analysis, because we don't just want to look at the daily chart only. We want to also look at the weekly chart. Why? Because multiple time frame analysis gives us different points of views. When you look at longer term chart like the weekly chart, you actually be able to see a lot of support and resistance points. And here I show you the weekly chart overlaid with the Fibonacci. There's the previous move up from here to up here, and then we just drag the Fibonacci tool, and it gives us different levels. And I'm using investing.com's Fibonacci retracement tool, and you can see the area where the Apple stock dropping is at the 38, near the 38%. This is actually a retracement support level, and stocks usually stop dropping at the 38% replacement support level. And this place coincides with the rising weekly 50 MA as well. So if you have a bit of knowledge about 50 period moving average, actually it can be a support, a psychological, subjective support as well. So that gives us more confidence when we look at the weekly chart. It coincides with the rising 200-day moving average, and it gives us more confidence that the stock is likely to reverse back up. Now, after looking at the weekly chart, we want to look at the 60-minute chart as well. That's where we zoom out and then we zoom in to the 60-minute chart to look at what is happening in the shorter time frame. As you can see, the stock actually made the triangle. You can connect the lows and the highs, and there's a triangle. And if you study a bit of chart pattern, you know that the triangle pattern is actually can be used as a bullish reversal chart pattern. And the way you trade it is, the moment it breaks out above the upper trend line, you buy the stock and put a stop loss below the entire pattern. Or if you're more aggressive, put a stop loss below the most recent pivot low. And another thing that's going for this stock is it broke a downtrend line. You can draw the trend line connecting the various highs, and the moment it broke out of the trend line, this is a bullish thing, a occurrence. And the next thing that support the reason why this stock is changing trend is there is a bullish cross. The bullish cross, I use the faster MA is the 20 MA and the slower MA is the 50 MA. So when you see the faster MA cross above the slower MA, that means there is a change of trend. And so this bullish cross actually tells us that, hey, the trend is changing, and that is why it also supports the reason why we want to be bullish in the stock. Now let me go back to the daily chart of this stock, Apple. I showed you the daily chart with the various indicators just now. Now I just strip it off of all the indicators, and I want to look at price analysis. Now this stock actually rose after it hit the 200 MA. It rose by a lot. I want to understand why it continued to move up until 199. As it near this area, the previous high it actually consolidated or traded sideways. But when you see it consolidating sideways, it actually had overcome the previous high. It has gone above the previous high. And if you remember technical analysis, support and resistance, once a previous high that used to act as resistance, once it has been overcome, it now acts as a new support area. So the stock, as it traded sideways, as long as it stayed above the support area, it was actually bullish. And as it drifted down sideways, you can see that it made three bottoming tails. Now, this bottoming tail, if you think about it, previously is the sellers selling down, and but by the end of the day, the stock closed up higher. So what this tells us that for 3 days, the sellers were trying to sell the stock, but by the end of the day, the buyers were in control, and this tells us that hey, nobody's really selling the stock, but it's quite bullish because buyers keep pushing the price up. And what is interesting here is that the last bottoming tail actually is the three of the bottoming tails are actually very near the 20 rising 20 MA. And when it is the stock is in a strong uptrend, the 20 MA can actually act as a support. And usually when stock is in an uptrend, it meets near the rising 20 MA, it can just bounce out of it and move higher, which is the case with this stock, Apple. Let us zoom in at the consolidation area. This is a 60-minute chart, a zoom in into what happened during the consolidation. You can see the stock actually traded sideways, slightly down a bit, but it created some kind of channel. But eventually it broke out of the channel, and the moment it broke out, it went higher. And of course, it reached the 199 price. So there you have it. You can see a lot of technical reasons why it moved up. And if you really want to know how a stock is going to behave in the future, you can actually study the stock chart of the company in and out, and you kind of understand that they have a lot of repetitive patterns going on. So in summary, identifying great moves in a stock requires a lot of technical knowledge. And actually, the more technical knowledge that you have and the more concepts that you know, the better you are at spotting trading opportunities. And you'll be better at spotting bullish reversals or bearish reversals in the stock. Therefore, it's very important for you to learn the different technical concepts and just don't limit yourself to one discipline. There's so many technical concepts. Try to learn as much as possible and then combine them to form your bias. And what I showed you throughout this presentation is that we look at many different type of charts. We look at daily chart, we look at weekly chart, we look at the 60-minute chart. Multiple time frame analysis is a more advanced technical analysis. And a lot of beginners, they only look at daily chart. But if you look at weekly chart, you'll be able to get a bigger picture of what the stock is doing in the long run. And if you look at the 60-minute chart, you get a better entry point. So you're an all-rounded technical analyst instead of just a single dimension. So thanks so much for watching. Please subscribe if you find this education helpful, and please press the notification bell so that when I upload new analysis or education, you'll be able to get be notified immediately for more great content like this. And if you want to learn more about my methods, please go to thestockmarketanalysis.com. So thank you, and see you in the next one.